Okay, everybody, let's go ahead and talk about how to build a trading plan. Very important. You probably heard, or seen, read somewhere that, before you really get into any trade, you should know where you're gonna exit, either for a win or a loss, and you should probably know when you're gonna get in as well. And what that means is you really should have a trading plan, because anything other than that is just basically gambling, right? You're just throwing money out, hoping to make some money on a particular trade, and we all know that hope is not a strategy. So you have to have a developed trading plan, and the way to do that is to identify some key indicators. So let's talk about that. So one of the first things I like to do is look at overall market structure and sentiment, right? So what's the market doing? Is it trending up for the day? Is it sideways, consolidation? Is it in a downtrend? What's going on? And one of the websites I like to take a quick peek at is Finviz. Just gives you a good snapshot of what's going on with the Dow for the day, the Nasdaq, and S&P as the three major exchanges traded on the U.S. markets. I also like to look pre-market, right? So Benzinga is a great resource for looking at pre-market movers, gainers, and losers. If I'm looking to go either long or short, but basically, I'm looking for basically anything above 1 million traded in volume pre-market might get my attention. What that means is that you should have a lot of buyers and sellers, and then once I understand what's going on with that volume, I try to dig in and try to figure out, okay, what was the news on that. So for example, if we look at this one, ANY, we go ahead and pull that in for the news today. And I'm looking for news. It looks like it's been on a trend up every day, and yes, there was news this morning. Okay, so also looking for running my particular scans. So Finviz does allow you to run scans, and in this case, I'm looking for low float, low market cap stocks, and I like to call these kind of like the small cap rockets, for the lack of a better term. But typically, when you have low float and a low volume and low float and a low market capitalization with high volume, they tend to spike the stocks up pretty well. So if you look, here's one, looked like a rocket. Here's another one today we just looked at. BTBT looks like it's been on an upward trend. So I like to run this scan to identify and narrow down some of the stocks that I might play for the day. All right, so critical component is looking at your buy and sell signals. And what does that mean? So you can run AI-powered algorithms that give you strong support and strong buy and strong sell signals. Now, they are not the end-all be-all. They are only used as kind of guiding posts or indications as to where the stock could potentially go. You see in this case it shot up, it came right back down for the next hour or two. I like to use Fibonacci. Fibonacci is a little bit more accurate. But whenever you're trading a particular setup and developing a trading plan, you're not really just looking at one indicator. Primarily, you're looking at price, action, and volume, but really you're using all these additional tools. And you can use any type of those to help you in verifying your suspicions on a particular stock trend. All right. Now, what else do you need to look at? You need to look at trade execution. So what this means is position sizing. How much shares should I buy? Do I scale in by buying smaller shares, and if it works, adding to those shares? Do I go smaller because I'm kind of coming down from a patch of losing trades? Do I go bigger? Do I press harder because I've been coming from a patch of winning trades? So you really want to know position sizing, and that's really based on market sentiment, your buying power, of course, and the total percentage of your total account size. You never want to be risking 100% of your account, right? Never risk all your money on one trade. Anything can happen. All right, once you establish that, you'll determine your entry point, your stop loss, the point you'll get out if you're wrong, and of course your target profit level, which is the point of the price action where you will get out if you are correct. You want to be using level 2, time and sales, and your indicators to determine this. Once you exit out, you want to make sure you're reviewing all your trades and documenting them. It's critical that you document them. It helps you determine errors and lessons and give you places to improve and things to avoid. Leave a comment below. Let me know how you build a trading plan, if you even build a trading plan, and what yours looks like. Thank you guys. Have a good day.